creditors got to know who to give the money to. So I hope these guidelines will address one of those fundamental issues I'm talking about, all right? In order to make sure the people who give the money get some return and see some good credit habits or good, and they get more money and build a credit history. So it's so good that I'm going ahead of myself. It's great. I enjoyed it. This is a very fantastic thing. I want to take this time to extend my gratitude to IFC and the World Bank for the strategic partnership with CBL. I mean, we're working in the next, the national extending the platform, interoperability platform, working on that too with you, and with the LIFT project, World Bank is saying we can work here. Also, we're working on the credit reference system, the collateral registries. They all have a part to play the whole structure we're trying to build here, the whole infrastructure. So thank you to the World Bank for that. We have a national financial inclusion strategy, and this whole thing is dependent on that strategy we're working on. So I think it was approved, everything's approved, strategy, and that's fine. Also here, we're talking about digital credit. Again, I don't know, it's so important because when I read, last time I was reading about Kenya. Kenya has a very good digital credit program. And I think we need to look at other countries in the region, what it was the countries are doing, to build on that. Another thing we're working on here, we're talking about is that access to credit is restricting a lot of people. We have 9 banks in that. 9 commercial banks. The commercial banks have 1 or 2 branches here and there. Nothing going on in the country. I believe that if we can do digital credit and do it in the next 2 years, that will change. And I see that our report in 2024 is that we expect to have 50%, but right now we surpassed 50% already. And all because of COVID-19. Because the projection in 2024 will be 50% of Liberia will be on this platform. 2022, we have 52% based on the Findex report. Right now. So imagine we do this here now, we will go 60-70% by 2024. So we look forward to that again. Also, but the issue here is, what is the benefit of the service? The mobile money operators. What's the cost of the service? You're getting $200, $300. While we're paying for the transaction. The economy of scale, the more people you have in the platform, maybe the price will go down. But we have to work on that part, all right? Because you want to give people credit, but you don't want every time they transact, you're taking more money from them. So that's something you got to work on because, and what's the security of the money? Because, like Kramer was saying, cyber security, my money is safe in my pocket, most. My money may be safe in the bank, second. But my telephone, and no connection, the telephone run out, I know all my money. That's why people want to cash out quick. So we send the money there. I rather get the money in my pocket than on this phone, all right? So we got to make sure that we build confidence, cyber security rate, customer complaints, address customer issues, because we're already poor. So you want to have more problem, when they put that money there, they can get it. So to build confidence, we have to do more education, more sensitization, to let people know that the telephone is safe. And not only smartphone, it's all kinds of those small phones, right? Your regular USSD phone. So we have to continue to do that. Also, we are saying that we are very, very grateful to the IFC and to the World Bank. Because we know when we sit, there are a lot of issues in terms of penetration. And I believe strongly that this whole digital credit will help the CBL a lot, help Liberian people, especially our mothers, our sisters, our brothers and sisters, our children going to school. Like I said, mothers are head of families, in their very polygamous situation where men get five wives, right? The woman is the more care about children. Whether you go to your 10 wife or your 4 wives, you make sure you care about children. What do we eat? You gotta make, like someone say, they gotta make cauliflower fried in the morning to make sure they turn the business around, and then the more they build more credit, you extend it for $400, $500. Next time they pay you back with $600, you start building your own network. And so we gotta work on the KYC part, the EKYC, Yeah, so I want to make sure I ask you all to have a robust conversation, strong deliberation, and the talkers are here. We're from Orange and Lone Star are here. Please bring your experience. MTA is global, it's all over this place. Bring your experience to the conversation. Let's make sure we get the best out of this thing. And when you tell the participant, thank you so much for being involved here. Bring your expertise to bear. There's no crazy idea. Bring all the best idea you can, good or bad. We'll take it. And the banks are here too. Was a librarian or the Banker Association president is here. So we'll take advantage of it. Thank you so much for all you do for Liberia. And well, for that, I would say thank you. Welcome to this workshop. And the workshop is one of my auspices for the beginning. Thank you so much.
Let's give a bigger hand of applause to our Associate Governor for the leadership. Indeed, we have a financial inclusion target, and the legal and regulatory framework serve as a basis for accelerating our financial inclusion numbers. And the digital credit guideline is one of them. So we've created an opportunity for an additional value proposition. We all can access credit through digital means. Thank you very much, DG, for those comments. Did I introduce myself? I don't remember. Anyway, so I am Mrs. Miata Kute, Director, Payment Systems Department. Thank you. At this time, we move on to an overview of the Digital Credit Guideline by Mrs. Baru Morris, Deputy Director, Policy and Regulation Section, Central Bank of Liberia. Thank you. Good morning, everyone. Please allow me to stand and say something. This month we have to provide an overview of the Digital Credit Guidelines. But before we start, just a quick question. How many of us here have heard or have read the Digital Credit Guidelines? We have people here that have seen it, have read it, have discussed it. Why? The 5 hands? Thank you. It seems like we have very few persons that have knowledge. We have everyone there, everyone there have knowledge at the minimum that there's a digital credit guideline. All right, this guideline was done, as was spoken by Mr. Dunso. We had assistance from the IFC. There was 3 departments in the central bank that worked on this. The Regulation and Supervision Department, the Payment System Department headed by Mrs. Kute, and the Financial Sector Development Unit headed by Mr. Chaffer. Digital credit, as defined, is the granting of credit through the use of online technology to low-income households subject to thresholds that we discussed at this morning. To read these guidelines, we have to read them together with the Consumer Protection Guidelines issued by the Central Bank, because this guideline complements the Consumer Protection regulations. So, we go straight into the objectives. The guideline is to broaden the scope of financial services, is to promote financial inclusion to the unbanked and the unbanked population without risking the safety and soundness of the financial system and the standards of consumer protection. The other objective is to prescribe standards by which third parties will be contracted by financial institutions to provide digital credit through the third parties platform. The third objective is to enable financial institutions to carry out digital credit in a cost-effective including the money. It's also to provide a set of minimum standards for data and network security, customer protection, and risk management to be adhered to by financial institutions, their branches, and agencies for the conduct of digital credit. And lastly, to meet the potential risks that may arise from the provision of digital credit. The scope. The data covers all bank financial institutions, all non-bank involved in credit, and all licensed mobile money entities intending to offer digital credit. These are the three institutions the guideline covers: banks, non-banks involved in credit, and mobile money entities. So, as is done with most of our introduction of new products in the financial market, you do an application to the governor of the central bank requesting approval. In this instance, when you are sending your application, you are to send it along with a business plan that describes the product to be offered, the geographical areas that you tend to cover, the ICT you tend to use. You describe the roles and responsibility of your institution and other third parties that will be involved. You provide the agreements you have entered with any third parties and all the other parties, your risk mitigation processes, the terms and conditions for users, and the copies of the proposed customer disclosure documentation and redress process. We also have a questionnaire attached to the guidelines. We'll probably share with you all at the end of the meeting. But it's attached to the guidelines, so maybe you want to look at that questionnaire. You have to submit a completed copy of that questionnaire. Digital credit alternative disclosure requirements. In offering digital credit products, and where the credit digital channel used does not provide truth in any disclosure form, as I stated, if you go to review this document, you have to read it along with the consumer protection regulation, because